Thank you for joining us at XM.com for today's market comment by Haralambos Bisuros. I'm Maria Pachurdes. The US dollar traded lower against most of its major peers yesterday, gaining some ground only against the Swiss franc and staying virtually unchanged against the Japanese yen. Today, the greenback is trading slightly higher or unchanged. It seems that dollar traders adopted cautious strategies once again, awaiting the US PPI and retail sales data that could shed more light on how the Fed could move forward with monetary policy. On Tuesday, the CPI numbers revealed that inflation was stickier than expected in February, which prompted some market participants to scale back bets regarding a June rate cut. According to Fed Fund futures, from nearly fully pricing in a quarter-point cut in June, investors are now assigning a nearly 75% chance for such a move, while the total number of basis points worth of rate reduction by the end of the year fell to 79, almost matching the Fed's own projections of 75 basis points. If today's PPI figures corroborate the notion that inflation in the U.S. is proving to be stickier than previously expected, and should retail sales rebound notably, as the forecasts suggest, then a June cut may become less likely in the eyes of investors, and thus the U.S. dollar and Treasury yields may rise somewhat. The Japanese yen is on the back foot again today as the probability for the Bank of Japan to exit negative interest rates next week continued falling to around 40%. Last week, reports that Japanese policymakers may indeed decide to press the hike button as early as at the March gathering added fuel to the yen's engines, taking the probability for such an action to around 50%. However, on Tuesday, Governor Ueda poured some cold water on such expectations, saying that although the economy is recovering, it is still showing signs of weakness. On Wall Street, the Dow Jones recorded some gains, but both the S&P 500 and the tech-heavy Nasdaq slid as investors took some profits ahead of today's data and next week's FOMC decision. The semiconductors index pulled back 2.5%, with shares of NVIDIA easing 1.1%, suggesting that AI-related stocks remain the main driver on Wall Street. Gold rebounded yesterday, boosted by a weaker dollar. If today's data adds to speculation that the Fed could wait a bit longer before lowering interest rates, the precious metal could pull back. However, such a setback may be treated as a corrective phase, as geopolitical tensions are keeping safe haven demand for the metal intact. Thanks for watching today's market comment here at XM.com.